Ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So as we're going to do today, you guys and girls can see we're having a pretty interesting day go on the market. We're in the midst of earnings season. As you're coming in, the first thing we're going to do, we're going to go into the roll call. At the 3 minute mark, we're going to acknowledge everybody for the roll call. Yeah. So we're going to get into the roll call. So before that, we're going to have a pretty interesting show today. We're going to talk about market news, right? Then we're going to talk about 3 ways people are very wondering right now, very worried right now, uncertain times. A lot of us don't know what's going on. I just got through looking over the Amazon earning reports. I just got through looking over Apple's earning reports, just a little bit, not a deep dive, but just kind of hearing what people are putting out there and whatnot. Haven't read it myself yet, but I'm kind of seeing what the sentiment is on the market. And with that being said, I am looking for the sentiment on the market of what people are thinking, what's going on. So some of the good things I had happen and some of the bad things I've had happen, with the market, right? So we're going to talk about, even though everybody's looking at the market and wondering what's going to happen, we want to know what are some ways that I can take advantage of this bull market, but also be prepared for the bear. So we're going to get into 3 ways you can take advantage of that bull, but also be prepared for that bear market. So without further ado, we're going to get into the roll call here shortly and soon. So everybody, hit the thumbs up button if you're coming in. Hit the share button if you're coming in. All that great stuff. And I'm probably going to open up the lines later on in the show. Goodness gracious, I almost got a big top lip, so I almost spilled my water. But we're going to get into, we're going to talk about market news. Then we're going to talk about the 3 ways that you could prepare for profit off of the bull market, but be prepared for the down market. And then we're going to get into a live call, where people are going to be able to call in. I'm actually might give y'all an extra one. So we're going to have a good conversation, all of the good stuff. But first, let's jump into this roll call. Let's see who is checking out the show live here and all of the great stuff. Miss Butterscotch says, good afternoon. Hello, Dan from Long Island. What's going on, Dan? What's up, Prince Wayne? Wayne is from Chesapeake, Virginia. Harloon Financials. What's going on? What's up, Prince? Pipe, I forgot how to say his name. He told me how to say it one time. I know he's from Phoenix. He said, good afternoon, Prince. I took a lot of notes from your video the other day on the battle between Southwest and Delta balance sheets. Good information. Thanks. And I know you commented saying that, hey, you got us doing homework with asking us what's the total assets of Uber and Lyft. So I asked those questions to keep you guys and girls sharp right there. I asked those questions to on this show. I show you guys and girls how to fish, how to look up information, how to, not wait to be told and be reactive. I pretty much show you guys and girls how you can find that same exact information yourself, right? So, so hopefully y'all take that on. But thanks for tuning in. Courtney Rogers, what's going on? He says, what's up, Prince? Mr. Lawman says, hello, how's it going? Jupiter First said, I'm new here, ready to be courageous. Let the show begin. Okay, all right, got it. We're going to talk about that. Yarn says, good evening, Prince. What's going on, Yarn? You doing all right? Joyce from Tampa. How you doing, Miss Joyce? Piper Forever. I hope I'm saying that right again. PT Forever. Okay. Petrie Forever. Petrie Forever says, I'll be taking notes as of today as well. Good day for everyone. Good day to everyone. All right. Eric says, he's from Wisconsin. What's going on, Eric Joseph? Nice to see you. Checking in. Yarns from Northern Virginia is in the house. Got it. Got a good bit of people in here today. Michael, we already know it's from Toronto. It's a Money Matrix. What's going on? We got Dervin Smith from Honolulu, Hawaii, checking in for another great episode. All right, cool. Tony is saying hello. Tracy Cooper, Hawaii. Okay, got it. Tracy Cooper's in the house from Hawaii. Get some love from Hawaii. Michael says, Prince, what up? What's going on, Michael? Nice to see you. Thanks for checking in. Okay, talking to each other. Chuck is chilling. He said, call in the house, scared of the V recovery bankroll by 2.5 trillion. Okay. We're going to talk about the V shape and the W shape or whatnot. Josh Knight, New Orleans is in the building. What's up? What's going on, Josh Knight? New Orleans in the house. Bones. Hey, Prince, I took your advice and got off the struggle bus. So, Prince, I took your advice and got off the struggle bus with Hertz, and I sold at open today before the trouble news. Made a 57% profit. Thank you. Oh, nice. Nice job to catch you, get off the struggle bus, right? Proud Dad, what's up, Prince? It's been a minute, but I'm back. Nice, Proud Dad, coming in from Georgia. Nice to see you. The Ninja PC said, I'm starting a new podcast, and hopefully I can get you on soon. Okay, all right. Yeah, shoot me an email. Antoine H, what's up from Arlington, Texas? Beginner, just trying to learn. Okay, cool. Okay, Roll Tide, Alabama. Okay, I see you in the house. We got Alabamians in the building. Miss Tamika Carpenter from ATL. Got it. All right. So that's going to conclude our roll call. So what we do every time we come in, I do a roll call. Tell me where you're from. I give everybody a shout out that catches us live. And then the next thing we're going to get into, we're going to go straight into our next topic. We're going to go into straight market news. What's going on in the market today? Followed by market news, we're going to talk about ways that people can profit from this V-shape, a possible double-shape, W-shape recovery. And people can profit from the recovery. And we're going to talk about some ways that you can prepare for the downside, right? So the market news is going on today. The hottest thing on the market right now, today, we've seen the jobs report. Jobs report stretched up to 30 million. 30 million people filed for jobless claims. Jobless reports come out every Thursday. This is for people that go in who file for unemployment. Doesn't mean they're going to get unemployment. It just means they file for unemployment. We don't get unemployment numbers until the first Friday of every month. So I think that's May 8th. May 8th, we're going to get a new unemployment number, right? And that unemployment number is easily, with 30 million people filing for unemployment, that's easily going to be in the double digits. So yesterday, we seen the market do very well. The market stocks dropped about 300 points, nothing major. Stocks dropped a little bit. We've seen unemployment, jobless claims go up, which is kind of is expected in a way. But another hot topic is we're in the middle of earnings season. So right now, Amazon just released their earnings after the market closed. Apple released their earnings after the market closed yesterday. Facebook released their earnings after the market closed. And I'm going to kind of give you a breakdown of kind of what I thought. Right now, over the overall market, my sentiment is that the market is trending sideways. The market only moves in three ways: up, down, sideways. So yes, it drops a little bit, comes up a little bit, drops a little bit, coming up a little bit. And I think that is due to a mixture of optimism and uncertainty. Some people don't know what's going to happen. They don't have a clear side. They may be a little bit positive because we're still down overall from our 29,500 points. We're down about, if I'm not mistaken, don't quote me on this, about 20% right now. But we're still down 5,000 points from our all-time high, roughly about 5,000 points from our all-time high. So even though we're still down, we haven't completely fell out the bottom. So the market, what everybody's fearing is there another drop coming? So you have people flying along. They don't want to jump in the market and make it just jump up like crazy. But then again, they're scared because they're feeling, what if another downturn happens? So right now, if you're an investor, you're like, hey, what if we do a V-shaped recovery? A V-shape is when the market goes down, then it goes back up. That's a V-shape. W-shaped recovery. Market goes down, comes up, shoots back down, then go back up. That's a W. Then you have an L shape. Market comes down, and then it just flatlines, like a dead person. Then we have a U shape. Market comes down, and it takes a while. It stays down at the bottom for a while before it comes back up. So those are when you hear people say a U shape, a L shape, W shape, a V shape. That's what they're speaking of. Most people in the market right now, they are anticipating another huge dip. That's why 300 points down, then 400 points up, that's nothing crazy. Everybody right now is wondering, are we going to be in for another downturn? So with that being said, Facebook went up about 8 to 10% today due to releasing its quarterly earnings. Facebook did good like I had expected. I figured that it was going to boom in an economy like this. I told a lot of my friends, and I said it on the show, I think I said or whatnot, but everybody's online. So digital content is winning. Also with Google. Google is winning too. Why is Google winning? Google is winning because it is the internet. So the bad thing about Facebook is the only way it makes money is via Facebook advertising, right? And Instagram advertising and Messenger advertising. But Google has more revenue streams, and everybody's online. People are at home. People are Googling and stuff like that or whatnot. So they're going to do pretty. They did pretty well, like I had expected. I figured they would probably beat expectations. Now, two companies, Apple, I didn't expect Apple to do too well because they have stores and their stores closed. But on the other side, the one shocker that did come out that I just saw about an hour or so ago was Amazon. I thought that Amazon would do extremely well with the earnings report. I thought that Amazon would thrive in this type of economy. They were hiring people. They were the only, not the only company, but it's one of the only major companies that was hiring people during the coronavirus. More people was at home. More people was using Amazon Prime. More people was ordering things offline. So I figured, right? I figured that Amazon would do very well. But the last time I looked at Amazon, it was trading down 5 to 6% in the after hours. So that one did shock me. But Apple, it went down only 1%. Nothing major with Apple. But I wasn't expecting that much at Apple. I thought Amazon was probably going to do a whole lot better. But being that it's online based with its AWS, advertising, and it got to a point where they're hiring people. It got to a point where they said, "Hey, we're not going to buy any more stuff." I mean, I'm not buying any more stuff. They wasn't going to ship out anything that was a mission essential. Another thing was when I looked at myself with the products I have on Amazon, the book series, right? Thank you guys and girls out there who support it. Even though the coronavirus series, not the coronavirus series, but even though the coronavirus pandemic, I've seen my sales increase, right? I even made sales through Amazon during this time frame. So I was expecting Amazon to do better, than they reported. They did. They beat on revenue, but they missed on earnings per share. So, their expenses went up. I think from hiring all those people or whatever the case may be. So that was my one surprise. So that's pretty much a wrap up of what's going on in the market. So the next thing we're going to jump into, we're going to talk about the 3 ways that you can profit from another downturn. Like right now, you're kind of wondering, like, Prince, should I invest? Should I wait? Should I wait for another dip? And if the dip does happen, what do I do? So I'm going to get into those topics. But before I jump into those 3 topics, I'm going to see what you guys and girls are saying in the comment box. All right, who we got here? Okay, making sure. 57%. That's good news. Okay. He was talking to Bones. Freddie B, what's going on, Freddie B? Coming in from Lansing, Illinois. Nice. And Bones said, I hope it happens again. Reggie said, what's up? I'm from Philly. What's going on, Reggie? Thanks for tuning into the Investor Show live experience. ZM is crashing, and why? Is that Zoom? I thought I brought my phone over here, but apparently I didn't. Ruby from Memphis, Tennessee. Ruby, how you doing? Thanks for checking in. Bones, Facebook makes a lot of selling personal data too. Yeah, that's true too. But majority of their income revenue that they report is coming from advertising. Right? Miss LaShannon says, yes, I was shocked as well. Yeah, I think she's talking about Amazon. Yeah, I thought Amazon would definitely do some great things. Ashley Neal says, hey, how you doing, Miss Ashley from the Bay? Thanks for checking in. She said, do you think another stock market crash is coming? Right? We're gonna talk about that too. She's talking about it's going to be a W shape. Zoom, I think that's ZM is Zoom. I'm almost certain, but ZM is down because Google made Google Meet free to everyone. And if he is talking about Zoom, also Facebook jumped into the game as well. Facebook has pretty much is doing what Zoom is doing on their platform. Facebook wants to keep everybody in their little world. Facebook don't do good with sharing its users with other people like YouTube does. YouTube is owned by Google, so Google is pretty much the internet is very freely versus Facebook want to get you in there and keep you right there in their world. To once that they put Amazon, okay, nice. If you put Amazon, you'll be pretty happy. But if you called Amazon, not so much. Kevin, thank you. I kind of figured. Thanks, bro. Okay. So I'm talking to Kevin. I did not expect Amazon to be on the incline. Not everyone is able to buy. That's true. That's another synopsis, right? say that, hey, everybody's at home. People are not buying from retails. No, the biggest thing that not killed Amazon, but they're going to take their second quarter earnings with their guidance. They're going to take $4 billion of their second quarter's earnings and allot it to coronavirus, not deficits, but coronavirus issues or whatnot. So that was a big thing. So $4 billion that they usually would make, they're taking that and allocating. Not they made their money on revenue. They made money on revenue. But one of the things that Jeff Bezos said is that, hey, I'm taking $4 billion and I'm allotting it to the effects of the coronavirus, right? So that's another thing that's hurt. Huey Ho says, "What's up, Fresh Prince from Hawaii?" What's going on, Huey Ho? Thanks for checking in. Larry, what's going on, Larry from Aloha? Man, we got a lot of Hawaii love. I appreciate that. A lot of love from Hawaii. Okay. So he said the futures gap down, and I sold my shorts earlier. Oh no. We're going to talk about that too. Bones, I love Elon Musk now. Still holding to buy, accepting another Tesla drop though. So yeah, Tesla went up to Tesla had a very good day today. They had a pretty good earnings report. So, but yeah, so that's pretty much it for the market news, right? So now everybody's wondering, Prince, is the market going to crash again? Prince, we're going to look at another dip? Are we going to run off to the moon? You know, we got unemployment going up. We're uncertain about the coronavirus. When is America going to open back up? Is the real estate market is going to be affected? So everybody's wondering what's going on. So this is my outlook, everybody. This is my metaphor. Tell me if my metaphor makes sense. You probably heard me say this metaphor before. Imagine if you and I were sitting at a train station, right? And we're wondering on that train station, there's a train sitting in front of us, and it's you and I standing there. We know this train will take us to our destination. Our train's going to go that way. It's going to take us to our destination. We're not questioning that. We're questioning the fact, before this train takes off, is it going to go reverse before it takes us to our destination? Or is it going to go straight to our destination? You got three options. Option A, we can just get on a train and just ride it out, wait till we get to our destination. B, we could wait to see if the train's going to reverse. Then when it takes off, try to catch it because we might miss it, right? Or do we C, we try to time when it's going to reverse, and right when it comes back by us, we're going to jump on. So now, some of the best people in the world, some of the best investors in the world around the globe, people who've been in finances for 20, 30, 40 years, not in finance, but at the highest level of finance for forever, they would be the first to tell you, I can't time the market. When you are anticipating and waiting on the next drop and jumping in at the next drop, you are essentially saying you're going to time the market. Timing the market is 95% of what most people can't do. And what I mean by most people can't do is most people will be wrong with trying to time the market, right? So if you're saying, hey, there's a crash going to happen, and I know it's going to happen, so I'm just going to wait till the crash happens and I'm going to jump in, you might be right. You might be wrong, right? If you're wrong, you're going to be an idiot. If you're right, you're a genius. So that's one of the things. I don't like to get into the time of the market game. I'm not smart enough to time the market. If I'm around some of the best investors of the world of all time and stuff like that, and they're telling me they can't time the market, why would I even try? It goes back to the law of possibility. It's like, remember those math problems you get? It's 100 marbles and it's 100 black marbles and 2 blue marbles and 3 orange marbles. What's the likelihood that you're going to grab a blue marble? What's the likelihood that you can time the next market crash? If you time in market crashes, please email me. You're going to be a trillionaire, right? If you know when the bottom of the market or when the top of the market is going to go, people get paid millions and millions and millions and millions of dollars, and they can't do it, right? They can get close. They may time one, but don't mean they're going to time the next one. Then some people just talk bad enough about the market because we know the market is going to crash. We just don't know when. So if you're smart, Prince Dykes, I don't try to play the time the market game. Second thing is, nobody is questioning if the market is going to return. Nobody is saying, man, I think the market is the market going to return? Nobody's questioning the market's possible return. Everybody knows the market is going to return. So if I hop on a train, if I choose choice A and I hop on a train, I know I'm going to get to my destination. Nobody is questioning will the Dow Jones go back to 30,000, right? They know it's going to go back. They just don't know when. So I can either hop on a train now, and if it goes in reverse, I just ride it on out, and then I just ride it. If it takes me longer to get to my destination, I do that. Or if I right? So now, what am I going to choose? I'm going to choose point A. I'm going to hop on a train, and regardless if it goes backwards before it goes forward, who cares? I'm not in here for the short run. I'm in for the long run, right? I play short-term plays sometimes, like an Amazon, right? I'm going to say I knew, but I figured I had pretty good reason to believe Facebook would do good, which it did. Had pretty good reasons to believe Google was going to do good, which it did, right? Had pretty good reasons that Apple probably wasn't going to do too good, and it didn't do too bad. It didn't do too good. Correct. The fourth time, I thought Amazon will probably knock it out of the park. They're hiring people are shipping out things of XYZ, and they beat on revenue. But by them hiring new people, they increased their earnings. They increased their operational expense. So they missed on the EPS. And then they're taking $4 billion of their net profits and paying off coronavirus issues or whatever the case may be. Maybe it's making the warehouse safer, whatever they plan on doing with that. So I was a little shocked by that. But anyway, I'm going to tell you guys and girls out there, go ahead, get on the bus. But I'm going to show you, well, Prince, while I'm on the bus, what if it crashes? I'm going to give you three ways you can profit from the next crash while you're on the bus. If the bus goes in reverse or the train goes in reverse while you're on it, I'm going to show you some ways to protect yourself. All right? So the first one, you got it right, ladies and gentlemen, cash. Having cash in your portfolio, ladies and gentlemen, will help you hedge against the market. Meaning, if the market goes in reverse, by me having cash, I can buy more. I can take advantage of another market crash. If I got money in now, yes, the money I have, you don't lose money until you sell. So if I have money in now, I keep it there. A crash come, I have money to buy. You don't want to happen a clearance comes on and you don't have any money. A clearance is no good if you don't have any money. So number one way to hedge yourself against while you're on the bus or you're on that train and the thing goes backwards, you have cash on hand to be able to double down on your current positions or to buy a little bit more or whatnot. So having cash in your portfolio is a way to hedge against another potential downturn, right? Some people say cash is trash or whatnot. So I don't say throw the whole house in. You can leave some cash to the side. If the market takes a downturn before it goes back up, boom, you got another cash to get yourself in at a better time. If we crash again, I definitely know we're going up for sure. I definitely believe in a bull market is inevitable then. So before I get into number two, let's see what you guys and girls are saying. What we got here. Text just read Bezos made $24 billion since the pandemic in personal wealth. Nice. Their revenues were up. They had great revenues. Freddie B, I'm waiting on stock market drop like a buzzer, but like a dead buzzer. But then think about it, right? What if it doesn't drop? Right? Do you have a dog in the fight? So you're essentially saying, hey, I'm standing by. I'm waiting for this train to go in reverse. Then I'm going to catch it when it's going back, right? You might be right. But the probability of you accurately depicting the next bottom of the market is pretty slim to none. I thought we was going to go down to 15,000, somewhere between 15 to 18,000, right? I thought 15 was a dead bottom, but we made it to 18, and then we've been up ever since, right? Or teetering up. Abraham, Houston is in the house. What's going on, Abraham? Courtney Rogers, Prince, how many stocks do you have in your portfolio? I try to keep 10 or less. 10 or less stocks in my portfolio. And the reason why is, let's take the airline industry. I just have Southwest, right? I place a bet on Southwest. I get the airline industry. I take the top two companies, maybe three. Most of the time it's top two. I take the top two. I compare, I contrast contrast between those top two, and I pick one and I roll with one. I don't go get Southwest and Delta and United Airlines and then having 30, 40, 50, 100 stocks in your portfolio. No, I like to center in on what I think I'm good at. And then if I'm right, I'm really right. If I'm wrong, I'm really wrong. Right? So you just sharpen your skills. Tyrone Houston, no matter what, this market is going up. Lifetime plays. Yes. Everybody knows this market is going up. They just don't know when. Right? They just don't know when. So if I know the market is going up eventually, I'm just getting on the train. Who is this? Tanya says, I want to invest in Berkshire B, but writing it out, thinking there with another dip. Waiting it out. Okay. Waiting it out, thinking there will be another dip. So now I'm just going to buy and ride it out. Yeah, buy and ride it out. That's what I would say. Because the person that bets on a rebound has a 95% chance of being correct. Now, don't break me down. I didn't do all the math behind it. But you have like a 95% chance the bull always wins. Everybody knows it's going to come back. We just don't know if another bear is going to come out and shake his head one more time before we go back. We don't know. And I'm not playing that game and trying to bet. Like, yeah, we're going to go down and we're going to go down to 15,000. And no, you can play that game, but trying to time it and jump in, jump out at the right time, not me. Bone said you can do ABC by buying in steps, but what is the little, but still a little dangerous. That's true. Courtney said you definitely need to ride that Berkshire Class B. Berkshire, Berk B is Berkshire Hathaway Class B shares. I want to invest in Berkshire Class B. Was waiting and out, thinking there would be another dip. How I know now, buy and ride it out. Got it. All right, who we got here? Bone says, Prince, I love the way you break it down. Got it. Wayne, having cash money. Yep, that's one. Now we're going to go into two more ways. I think 18,000 is the bottom. Yeah, we hit 18,000 on March 23rd, if I think that's the date. March 23rd, we hit the bottom. That was 18,500. But, and we've been up since then. What do you think about Bowles Val? Yeah, I don't know that company. We're going to keep it on topic. Thoughts on RCL? I have been gradually increasing since the market dip. No ship selling. Q1 earnings was supposed to be yesterday, turned in today, but still no report. Thoughts? What type of stock you got? Did not report earnings? It sounds like Royal Caribbean. Delta kind of did that too. Delta held on to their earnings a week late too. So, but I think they wanted to wait till what they got on their bailout. JetBlue announced all passengers will wear a mask. I think that's marketable. Yes, I've seen a couple companies came out and announced that. So we spoke about cash. Let's get into number two. This one's a little dangerous. There's two ways you can do this. Number two, inverse ETFs. When I'm speaking about inverse ETFs, I'm talking about things like the SDAO. I'm talking about things like the S&P 500, XPXS. You have a bunch of different leverage ETFs. These are ETFs that they go up in value as the market goes down. Sometimes you can use these as insurance policies, but you got to be very careful when holding these for a long period of time. If you hold these for a long period, they're not built to hold for forever. They're built for people to use, if you believe the market is going to go down, for advanced traders, right? If you hold them for a long time, sometimes they can hit you with reverse fees, all type of weird stuff, right? But inverse ETFs is another way. Inverse ETFs. This is when the market is going down, these are going to go up in value. You can use these like an insurance policy inside of a portfolio to take advantage of the downturn. Another thing, gold has been very weird. Usually gold goes up when the market goes down. But now lately I've been seeing gold follow the market. Market goes up, so does gold. Gold go down, so does gold. So that's been kind of weird. Your investor show mug. Make sure you grab one. So that's number two, inverse ETFs. All right. So that's the way to look at it. Here we go. Number 3, we're gonna get in number 3. I'm gonna take some of you guys' questions. We're gonna go in the comments. Then we're gonna jump on the live. Right? I'm gonna allow you guys and girls to. I'm gonna take 1 or 2 calls for people that want to call in and speak live. I'm gonna open up the opportunity. Number 3, tech companies that pay dividends. We know that tech will probably tech and finances. Well, tech, finance, and energy has gotten hit the hardest, the worst so far. Meaning that they're going to be the sectors that's going to probably make the biggest rebound. So when I look at the tech sector, I can say, hey, you can put some money in tech, like a Tesla, right? The only thing bad about Tesla, it doesn't pay a dividend. So let's say the market takes a year to return, you won't collect anything until the market returns. But you have companies like Apple, you have companies like Microsoft that are paying dividends, right? You have companies like Apple, you have companies like Microsoft that are paying dividends. When these companies are paying dividends, you get to not only when the market returns, you're going to go up and probably beat the market, where that particular stock will probably beat the market, but also while the economy is figuring it out, while we're figuring out the coronavirus and open back up the economy, you could be collecting a dividend every month just for holding the particular stock, right? So tech companies that pay dividends, they're probably going to be the ones that are going to rebound the hardest. They're the most volatile. And if you got one that pays a dividend, I think Intel pays a dividend as well. But look at the big tech companies. Google doesn't, Facebook doesn't. But I know Apple and Microsoft does. They do pay a little dividend, nothing crazy. But these companies are probably going to rebound very well. They're probably going to go back up either 10 to 15 to 20% when the market returns, and you're going to collect the dividend as you wait. So if the market does take a downturn while you're holding these companies, you are collecting a dividend. All right. So now I'm going to take some questions from the comments. Then we get through with the comments. I'm going to give y'all a bonus one. And then also, not only am I going to give you a bonus, I'm going to open up the lines to take some calls. All right. So let's see what we got in the Harlow says, what is your biggest stock position? It's either probably Google, Amazon, pretty heavy on Apple. It's probably, Berkshire. Probably those. It's probably a mixture. I don't have like one big stock that I just love. I am falling in love a little bit more with Southwest. I think it does a great job with managing his debt. And if it returns back to where it was, that'd be a nice return. Harlem, I only pick the top 2 from every given sector. Smart. I don't try to go in there and get 4, 5. Hey, look, I got Royal Caribbean. I got Delta Airlines. I got Southwest Airlines. I got United Airlines. And when you look at it, all of your stuff is connected to transportation and travel. I pick the best one and I ride one horse. Yes, Delta may outperform Southwest. United Airlines or JetBlue may outperform, but I don't care. I got a horse. It's making me some money. I'm not trying to pick the best one. I try to minimize my risk, even though sometimes I fall victim to it as well. Every investor, I don't care how seasoned you are, every investor falls lure to, man, if I do this, even though it's risky, I could lose everything, but I can double my money. We're all victim to it. We're all victim to it. Versus that slow, gradual money like Berkshire B is not going to be an overnight sensation. It's not going to double your money tomorrow. It's one of those things that you're going to zoom back on and be like, oh, wait a minute. That's what they do. Tyrone said, I don't think it's water in the mug. I'm telling y'all, you read financial reports so much better when you drink out of the Investor Show mug. You can grab one in the description box. And to think about it too, I asked you guys and girls questions on the platform about different things that are going on. And what I mean by that is when I ask you guys and girls, different things are going on, like who has the most total assets? Who make the most profits? Who has the most debt? Who has the least amount of debt? I'm asking you guys and girls those things so you guys and girls can read and study those financial reports and learn those financial reports and stop going off of what somebody told you, what you heard, or what you think. You can actually become go away from being a speculator into an investor. James Bond in The Big Short. In The Big Short, inverse ETFs was how the garage investors made millions. Yep, that's true. Linda Harris, hello, Prince from Tallahassee. Nice. Thank you for checking in. All right. Y'all laughing about my mug. What I got in my mug? It's water in my mug. C Lane, hey, what's up, Prince? I just turned in. How is Apple reaching $300 if their stores are closed and people are broke and jobless? Sorry if asked already. No, I'm thinking that's what you said already. Think about it. People are not trading. Stocks don't trade on what's happening today. They trade on what's happening in the future. So there was a time when Apple was $700. Go back and look before 2014. Apple was $700 per share. I remember those days. Apple did a 7-to-1 split. They split all the way down to 100. Now they're back up to, they was over 300 already. They have already been on 300. So them going to 300 is nothing new. They were already at 300 before the coronavirus. They're just going back. So Apple going to 300. I told you guys and girls all the time, a call on Apple June at the 300 strike price. It's like a for sure to win, right? I mean, it probably won't be a 10,000% return. It may be about 20 to 50, 60% return, but within 1 year, a call 300 strike by June is very conceivable to see Apple over $300. That you'll be in the money by June easy. So that's my thing. She said, "Can you reach behind you and get a copy of Rich Dad Poor Dad?" Let me see if it's over here. Let's see. Y'all know that's a green screen, right? It's completely green behind me. But yeah, speaking of that, Robert Kiyosaki, well, you know what? Valuetainment, Patrick Bet-Davis of Valuetainment, which is the largest YouTube channel on entrepreneurship, will be on the show on Monday afternoon. He'll be live on Monday. Patrick Bet-Davis. He built a multi-million-dollar insurance company, and he got over like 2 million subscribers on YouTube. Done some great stuff. Old veteran. He has confirmed to be on the show on Monday live. So y'all will see him on the show live on the afternoon. Speaking of Rich Dad Poor Dad, Robert Kiyosaki has confirmed to be live on Wednesday afternoon. So Robert Kiyosaki will be live on Wednesday afternoon, and Monday afternoon will be Patrick Bet-Davis of Valuetainment. I got to get better at checking the company's debt. Yes, you know, that's what's going on there, Jenkins. Show me how to make a call on TD Ameritrade. Courtney, I know I got a video on it. I know I'm probably like 10,000 videos, but I'll make another one. What do you think about oil tanker stocks, shorting them, oversupply? Harloom, I'm not. Oil, get out of here. I don't have no time for that. I'm not smart enough for oil. Most companies have to worry about profits and losses, right? Every company has to worry about politics in a way, like a trade war. But oil is never any rest in the Middle East. It's always somebody mad at somebody in the Middle East, and they control the oil supply. They control all the tankers, and why would I want to put my money somewhere where unrest is? Not me. No oil for me. Jonathan Jacob said, "Do you think about crypto trading or holding in crypto?" No, I currently don't hold any crypto. The reason why is two big questions that I have with crypto that people seem to can't answer. The first question is, first of all, there's really like no expert in it. But the first thing with crypto, everybody says, "Oh, cryptocurrency is great. Cryptocurrency is good." But my thing is, how does one currency have value over another currency? Inside the crypto world, there are thousands of different types of cryptocurrencies. Some are being created every day. If you and I, Jacob, can go create a currency, what makes it different from Bones when it created a currency? What makes Bitcoin different from Ethereum and different from this one, different from this one? And think about it. Imagine if you and I had a money machine at home. If I had a money machine on my bookshelf, the Secret Service would come down here and kick down my door and take it. Why? Because they know that you can ruin the value of you can ruin economy. The dollar will lose instant value if everybody can print it. As long as the Federal Reserve can print it, cool. But the Federal Reserve can lose instant value if everybody had a money machine at home. And that's what cryptocurrency kind of seems like. If anybody can go get some software and have a little technical knowledge, they can create a cryptocurrency. Then how does one have value over another one? The second thing they're going to be, they say Prince, where everybody's going to be using it. You know, we're on a digital dollar, which I would agree. We are on a digital dollar. But the downside of being on the digital dollar is, what if the government created their own cryptocurrency? What if the Federal Reserve said, you know what, digital dollar starting June 1st? If the government turned the dollar into a cryptocurrency that on June 1st, what would happen to the value of all the other cryptocurrencies? They'll probably lose value, go out of business, because everybody's going to use dollar. Everybody's already on a dollar. So that's why I don't have anything, those two questions right there would stump everybody, so I can't do it. Ashley said, what's the difference between SPPPX index and the XPXL? SPWPPX is a Goldman Sachs S&P 500 index fund. Tracks the S&P 500. SPXL is the S&P 500 on steroids. It is a leverage ETF, meaning that every day the market is open, they reset, and they buy a bunch of calls on the market going up. So if the market goes up, it does well. It outperforms the market if the market goes up consistently over time. But if the market starts to go down and get very volatile, they become very bad. The only time to make XPXL good, or inverse bullish ETF good for a long period of time, you got to constantly, every time, like tomorrow, like today, the market went down 300-400 points, you got to buy. The market goes down 1,000 points tomorrow, you got to buy. And if you continuously buy every time the market goes down, every time the Dow Jones go down 500 points, when it does rebound, that's when it could be beneficial for a long term. But just holding it and think I'm gonna hold it for 10 years, not a good idea. But SPXL is pretty much SWPPX on steroids. All right. Hope that helped you. Hope that made sense. LJ said, "Man, you got Robert Kiyosaki." Yes, yeah. Yes, they definitely confirmed. They got everything, and you'll see me promoting Patrick interview first, because Patrick is first from Valuetainment, then Robert Kiyosaki is on Wednesday. Jupiter said, before COVID-19 pandemic, Macy's was closing stores. Do you think Macy's will survive? No. Jupiter, you will notice Macy's is on the struggle bus. Everybody, please tell Jupiter what is the struggle bus. We don't do the struggle bus over here. The company was already struggling when everybody else was doing good. Now they're really struggling. I don't sign up for the struggle bus. If I lose money, when I lose money investing, when Prince Dykes lose money, it's because I'm trying to make more money than expect. Like, for prime example, right? You got Amazon. If you're right on Amazon, you're going to make 100% return in one day. If you're wrong on Amazon, you're going to lose 50%, 60% in a day. I'm more likely to get in trouble on that. That's where I would get in trouble at. But going in there and buying a Ford that's struggling, and a Macy's, and buying struggling businesses, no, I'm not dumb. I'm not going to do that. Why would I jump on Macy's when I could jump on a Facebook or Amazon or Google? Amazon had a setback, but they're going to come back. They're going to come back. You saying no oil for you? Is that Gush as well? Yes, that's Gush as well. I'm not, I told you guys and girls about Gush. Gush is a leverage bullish ETF for the oil and energy sector. I'm not smart enough on that. It's too, I'm just good on the oil. But I would help. It's a financial literacy show, financial education show. I will show you guys and girls how to do it, but that's a no-go for me. Michael, shout out to Michael Davis over there. He says crypto, no backing, is not regulated monopoly money. I mean, Mike got a point. Here's another thing. If you meet every cryptocurrency buyer, they have the same mentality of a person that buys a lottery ticket. Person that buys a lottery ticket says, hey, I'm going to just put something on it. I bought a lottery ticket or 2 in my life. I probably bought a total of 5 in my life. But people say, hey, I'm going to put something on it. Let me see what happens. That's the same thing I see the majority of crypto people are doing. It's cheap. You can throw something over there. If it turns into something, great. If it turns into nothing, that's nothing. That's not investing, ladies and gentlemen. That's speculating. An investor is someone who cracks open books, right? Who takes notes, who cracks open books, who look at the fundamentals of the company. What is the revenue? If you want to go get money you want to go get a loan from Bank of America, they want to see your credit score. They want to see how much money you make, how much money you're losing, how you're going to pay their money back. That's the same thing you should be doing as an investor. A speculator is like, yeah, let me put something on it. Let me roll the dice. Same thing people do in Vegas. But I'm not surprised, because Vegas has been in business for over 100 years. So it's not surprised everybody thinks that way. Al Gray, your thoughts on Five Below? Five Below 5. AJ Gray, I'm kind of lost on that. Kevin says, what's going on, Kevin? You should be getting your book soon. Congratulations to Kevin, y'all. He won Fox Business Charles Payne book, Unstoppable Prosperity, and good luck on that. Hope you get the book. Hope you get some out of it. Mail the book off on Monday, so hopefully you get it soon. Let me know when you get it, and if you send me a picture, I definitely post it. I want to make sure everybody got it. That my word is 110. What's up? What about Japan and Spain? Their market crashed. They said market crashed 30 years ago and never saw higher highs. You think the U.S. would do similar? No. The U.S. economy is backed by the military, meaning that, look at it in the street terms. If you got the guns, you make the rules. That's what our economy is mostly built. We have muscle to get our way, to do what we want to do. That's just the American way, right? But there's a threat that the economy will never come back. Jonathan Jacobs, I'm invested in 4 right now that aren't currencies, that are better described as assets. V-Chain is one, partnership with Walmart China. HM Clothing, they do product tracking. Okay. Well, I do believe in blockchain technology. I do believe in the technology behind cryptocurrency, blockchain. That's what it's kind of sounding like V-Chain is. I do believe in that. But just a regular cryptocurrency, not so much. Haloon Financials. I'm about to use the month of May to study the hell out of the market. It has a lot of stuff I need to learn to become a true, informed, intelligent investor. Intelligent Investor by Benjamin Graham. Smart move. LJ says, awesome. Michael X said it exactly. Man, get off of Ford Press. Man, everybody know Ford is on the struggle bus. There's nothing wrong with being on the struggle bus. Call it how it is. Silver Lion said, hey, Prince, I got on late to the show today. What's your top 3 growth ETFs? QQQ, which is the NASDAQ, because that's most of the technology companies. SPY. Most of those other growth ETFs, when you compare them to the S&P 500, a lot of them don't even beat the S&P 500. So if I was going long term, looking for some growth, QQQ, NASDAQ. And you want to get bullish with it, TQQQ. Tango, Quebec. Julian said, congratulations, Care. Got it. Mike says you're on fire. All right, cool. Now we're going to go for the bonus round. Y'all ready for the bonus round? Here's the bonus round, ladies and gentlemen. Here is the bonus round. Number 4, IUL, Index Universal Life. When I get done with this, I'm going to open up my phone line. So let me grab my speaker. I want somebody to comment. What is an IUL? And it's in regards to, this is a way you can invest and avoid the downside, avoid some of the downside. IUL. Hint, it's not a stock symbol. Y'all give me 1 second. I forgot to grab my speaker. I'm going to grab my speaker. I'll be right back so you guys and girls can call in. All righty. Let's see who knows it. Texo said QQQ, awesome choice. Nice. Max B said gold. That is wrong. James Bond said universal life insurance. You're close, pretty close. Michael Max said he loved the show. Thank you. Do you know anything about the TSP government funds? Which ones to invest in? C and S. C fund, S fund. C is for common stock, which is your large cap S&P 500, and S funds, which is a small cap. I don't believe in the I fund. That's the index fund. I mean, that's the international fund. I don't believe in international because if you invest into the largest companies in America, they're already international. Google already has international exposure, as we can tell. Apple already has international exposure, as we really can tell. So why would I don't need the international. So I just do it large cap, small cap. TSP, ladies and gentlemen, that's the thrift savings plan for mostly government employees. Courtney Rogers says insurance. BLR said 100%. See, we got to think about it. The best performing one over the last 10 years, and most of one, it's like, take me and my son. I'm 35 years old. I'm like 6'1", 6'2". My son is 9 years old. He is about 4 feet, right? Who do you think is going to grow more over the next decade? Right? It's probably going to be my son because he's small. So that's why I like small cap. Large cap companies are pretty mature. How much more can Ford and GM really grow versus how much Tesla can grow? That's the way I look at it. Do you look at the numbers? They're doing it better. Do you prefer QQQ over Berkshire B? Well, that's I'm a bad person to ask about that, Tony, because I have personal feelings for Berkshire. You know, I know the people over there. Obviously, I met the people. I think it's an awesome company. So people that buy Berkshire are people that hold it forever. So I'm going to buy, so I'm biased. So I would probably hold Berkshire. I'd probably get both. So, but to be honest, if I was unbiased, I would go with QQQ. Okay. SPYB, SPY is a bit expensive. If you think SPY is expensive, get the SWPPX. Actually, SWPPX is the same thing as SPY. Right? All right, let's get into it. Let's see what it was. Right? I'll give me 1 second. Let's talk about what IUL was. I'll give me 1 second. All right. With the IUL, then after this, ladies and gentlemen, that's going to be the call-in number. I'm going to stroll it at the bottom there. No, I'll give me 1 second. Y'all give me 1 second. So that's the call-in number strolling across the bottom as we get into the IUL. The call-in number, ladies and gentlemen, is 669-275-0760. Right after I get through talking about IULs, I'm going to take some calls, call in or whatnot to talk to me live. Y'all hear my voice all the time. I want to hear you guys and girls' voice. So y'all can get in, y'all can talk to me live, and we'll talk about it that way. All right. So IUL is an index universal life policy. Index universal life policy. The I for index is a whole life insurance policy, meaning it covers you till you're 125 years old. It means that when you pay your policy, some of the money covers your premium. The rest of the money goes to the index, which is S&P 500. That's what the I stands for, index. Universal. Universal means you get to choose how much you want to pay. $50, $100, $10, whatnot, $200, and how much you're paying, and depending on your health, that's how they decide how much you're going to be covered for. The L, life insurance. It's a whole life insurance policy. Prince, how is this an investment vehicle? This is an investment vehicle because what it does is when the market goes up, you're capped out at like 14%. So last year, the market went up 30%, you only get 14. This year, let's say the market goes, last year, the market, the year before that, let's say this year the market goes down 10%, you get 0. So the most you can make is 14% in 1 year. The least amount you can make is 0, right? So that's another way people can use an insurance policy. They invest into it. The cash value of the insurance policy tracks the S&P 500. When the market goes up 14%, it gets the top, but it gets none of the bottom. It gets some of the gains, none of the fall. If the market only goes up 10%, you get 10%. If the market falls down 30%, you get 0. So that's another way you can hedge yourself by being an investor and not being what you call it. Right? So now I'm going to open up the lines. The doors of the church is open. How they said it in the South. For anybody that wants to call in with whatever they want to talk about. Right? Let me make sure I got that over here. So there's a call-in number. It is displayed. If you want to call in to speak about whatever. What do I think about GM? I think GM is going to buy Ford. Or they're going to merge. I think GM and Ford are going to merge. You know, I don't see automotive getting built out again. I think that somebody is going to merge with Ford. That's my outlook on GM. Actually, ask me about SBYB. I know that's S&P 500. Let me look at the B. One second. Oh, SBY buyback. The buyback ETF? Why are you looking at the buyback ETF? That's SPYB. Are you doing stock buyback? I'm not keen in on that one. I don't know where you get the SPYB from. Right? Tanya said, LOL, okay. I'm not big on that one. There you go, Jupiter. IUL, cash value, money. You said IUL, cash value of money earned in stocks, perhaps. That was pretty close. So you're right. It is a whole life insurance policy with an IUL, and the cash value tracks the index, tracks the S&P 500. And the good part about it is it gets some of the upside, but it gets none of the downside, right? It gets some of the upside, none of the downside. Kevin said, with all the money printing, you think inflation will occur? Yes, to a certain degree. I think gold will go up in value. I'm surprised it hasn't gone up yet. But as we print more and more money with all the stimulus packages, we did 2.3 trillion and another 5 billion. We just running the print off, and I think that's going to raise the value of gold, in my opinion. And you can't invest in inflation. You can't invest into the CPI. The CPI is the consumer price index. That is inflation. So if the CPI goes up, you can go up as well. That's another option for you, Kev. CPI, consumer price index. All right, hold on. We got a call. Hold on one second there, caller. Can you hear me?
Hey, Prince, how you doing?
Hey, give me 1 second. I want to make sure everybody can hear you. 1 second. All right. Tell me, what's your name? Where you calling from?
Gary calling from Annapolis, Maryland. How you doing, Prince?
Gary calling from Annapolis, Maryland. Nice. Okay, you out there with the Naval Academy.
Yes, sir.
Okay. What's on your mind?
I appreciate you.
Can you hear me?
Yep.
Okay, yeah. What's on your mind?
I was calling to talk about Tesla. See what your thoughts on Tesla is on the long run. I'm not too worried about the shortcomings. I've been listening to a lot of Kathy Wood from ARK Invest, and that they have some pretty bull outlooks on Tesla, and saying that from their models, they predict in the next 5 years it could be around $7,000. And the main principle she states behind that is saying that the analysts that evaluate the stock are basing it off other automotive companies when they need to be looking at Tesla more as a technology company versus an automotive company.
Okay. Think about Tesla. Fundamentally, it's a nightmare, right? When you look at the fundamentals of the company, when you look at the revenue, the company is costing almost $800 per share. And you look at their revenue, not even profitable, barely can turn profitable. They are not, definitely, people are not buying Tesla based on what's happening today. People are buying Tesla for what's potentially happening tomorrow. So for prime example, you look at a Ford, a General Motors, things like that. Those companies, how much can Ford really grow? How much can General Motors really grow, right? Versus Tesla has a lot of growth to do, right? Tesla has a long way to go in the future, right? It has a lot of growth. It has a lot of ground that it can potentially cover. So Tesla right now is trading off of emotions, because it's definitely not finances, right? Because everybody knows a company that's not, I mean, one of the most cash heavy companies right now is probably Google. You're talking about Microsoft has 192 billion cash on hand. I haven't looked up, I don't know off the top of my head, how much cash does Tesla have on. I probably can look up here shortly, but Tesla don't even compare to most companies. So Tesla is very aggressive and it's trading off of the future. The only time Tesla would get smashed if it don't live up to the hype. So right now Tesla has a lot of hype, and then people got to catch on to the hype. So what I would look at it, this is what I would put. I have in mind. I do have a share of Tesla, right? But Tesla is one of those things that I put in a category of Uber. Uber is unprofitable. I don't know if Uber is going to make it, but it's less than 10% of my portfolio. It's a little spicy stuff on the top. So would I go throw the whole house at it? No. It's one of those things that it's like, Tesla is like this. If I was to put it, Tesla's a first round draft pick going into the NBA. But you don't know what you call it, right? You don't know if they're going to make it. You don't know if they're going to be good in the league, right? The highlight, give me 1 second. I know we got another caller coming in. Give me 1 second. So when you look at Tesla, right? Make sure I got it. 1 second. So when you look at Tesla, right? You have to ask yourself the question of, what you call it. You know what I mean? Who is, are you going for the future? What are you investing for? You know what I mean?
Yep.
So that's my outlook on it. That's my thought process on Tesla.
Yeah, that's good. I'm always looking into the future. I'm not too much on the 1 or 2 year time horizon. Always looking 5 to 10 years out. And I think that it is going to the future, and there are a lot of other automobile companies are looking to turn electric. I think I read something about Volvo like 2022 that they're trying to produce all electric cars and things like that. And I know they're getting into that electric semi truck market too. So I was just looking at, Tesla is ahead of the game.
Yeah, nobody else is, everybody's getting away from oil, right? That's why I'm not a big fan of oil. Everybody's getting away from oil, right? So when everybody's getting away from oil, that's how I look at Tesla, and I think Tesla is so great. You know what I mean? That they're in front of everybody else. They are in a market. They're that first round draft pick. Everybody's seen the highlights in college. Everybody's seen the highlights in high school, and they're wondering, oh man, this is LeBron James. He's great, but we don't know. This is Kobe Bryant. They're going to the league. Are they going to hold up to the league? So, when you're the first round draft pick, how much money do you get paid? You get paid a lot, right? So right now, people are paying a lot for Tesla, thinking that when it gets to the league, man, it's going to tear this thing up.
Yep. So what do you think about investing in some of the natural resources for the batteries, like cobalt and lithium and things like that?
with that, I can't speak on that, and I'm not smart enough on that arena. I don't know what stocks they are or how do they perform in that material arena or whatnot. But that's why that's my thought process on that one. Like lithium, I have to look into it. Are these batteries are they modernizing? Are they going into a new industry? What's going to happen with it?
Mm-hmm.
So that's the way you're going to think about it.
All right, I appreciate it, Prince. Appreciate the live streams. Always good information.
All right, man.
And I'm always tuning in.
Thank you. I appreciate your support.
All right, have a nice one.
All right, you too. All right. So let me take some questions from the inbox. Right. So said they scared. Oh, she was talking about people calling in. Okay, I guess it wasn't. George said jump on the SWPPX bus. That's the S&P 500, right? And it pays a nice little dividend too. Denise said, finally caught you live again. What did I miss? Ooh, y'all got it. And then Wayne said you missed a lot. You got to catch a replay for most of it, right? We talked about the different ways of the market going up and stuff like that or whatnot. And that's the way it is. So, but yeah, that's the way we saw everybody else. I'll give me 1 second. Okay. Michael makes a great analogy on Tesla. Thanks. I appreciate it. Now he says that Jupiter said Tesla is definitely in all the hype. They try to stay relevant with the verbal communication media. Yeah, they try to get everybody to stay riled up. They get everybody to look on there, more than anything else, right? Tamika call in. Harloon said Tamika. Trucker says easy on the computer semi-truck talk. I don't know. Oh, I think people talking about Uber Freights and stuff like that. Harlem Financial. In all fairness, Tesla is light years ahead of car makers when it comes to electric vehicles. Yes, they've been doing it for a while. Matt said, I'm late. What's up, Prince? What's going on, Matt? AD said, my mom keeps bugging me to buy Tesla. I'm waiting for another dip. To be honest with you, I'll go ahead and get I will go ahead and buy the stock now. Say if I had $500, I'll at least get one share of Disney now and then sit on the sideline with your cash. So if another crash happens, you can buy another share when it goes down, or you can catch it right on its way up. Macy's put options before earnings. Do you have an opinion? Ooh. Let me see how much is Macy's right now. So this is someone who's looking to bet against Tesla, not Tesla, but Macy's, right? So we're going to take a look at that. Let me see. Macy's at $5 right now. Would I 25% in dividends? Why are they still paying a dividend? 25% yield? No. I don't know. I gotta look at the option chain on that one. It could be of course, but this is what happens too, right? Look at them year to date. What you're looking for to drop, their drop could have already happened, right? You want to call in? Definitely feel free to call in. right? You said, what's your favorite dividend stocks outside of MAGA? Kevin, outside of MAGA, if it was just dividends alone, you got to go with AT&T. You got to go with AT&T. You got to go with what you call it, right? That's where you look at it. That's the way I like to look at it. You got to think about it. Hold on, Matt. The thing you got to think about, you're saying Macy's is very low. The question is, too, you see some people say, oh, man, look, Blockbuster is on sale. That's what some people thought in 2000. Sometimes it's a time shift, right? You got to look, did the times change? Some people look at JCPenney, Macy's, and Nordstrom's. Oh, they're on sale. Not realizing that the game has completely changed. So be very careful that the game has not completely changed, right? So CNBC said Apple had 192 billion in cash, but when I looked up their finances on the SEC, it was 48 billion cash. So it didn't understand the value of 192 came from. You got to think about it. Let's look it up then. You got to think about what happened today, Kevin. One second. Make sure I can see this correctly. All right. What you got to think of, Kevin? Let me see if I can share my screen here with you. So we got total right here. What I'm sharing with you. This is the 10K filing that was just filed a couple hours ago by Apple. So you was probably looking at 10K, Kevin. You probably got to look at their new filing. So right here, well, hold on, that's not the new one. That's not the new one. I'm sorry. Give me 1 second. Not even the new one. Hold on, give me one. Apple Incorporated, April 30th. Where's their 10K at? It's on the SEC right now. Give me 1 second. Let me find it. I'll give me 1 second. Apple. Sometimes they just put out their new quarterly report, Kevin. Apple Incorporated. Let's see what this is. I don't want to know about an 8K. They filed a 10Q today. Why did they come out on it? It's weird. They kind of announced on the 8K. Let's take a look here. No. Let's see here. So there, I'm seeing total current assets of 162. No, 143 billion total current assets. 40 billion in cash. 53 billion marketable securities. 15 billion in accounts. 3 billion in inventory. Vendor is 14 billion. 15 billion and 143 billion, right? So non-marketable securities 192. So I'm saying 143 billion in total current assets. I think this is the report they put out today. They put it out on 8K today. Oh, well, that's kind of weird. Why they put it at 8K? And this is what I got off of, their filings. This is what they filed today. Very weird. Apple today announced financial reports. The Apple revenue was 53 billion, an increase of 1% from a year ago. Quarterly is 255, up 4%. International sales account for 62% of the revenue. Despite COVID-19 unprecedented global impact, Apple grew for the first quarter by all-time record services. Tim Cook, Apple CEO, "It's a difficult environment. Our users are depending on Apple products. We are proud of Apple's worldwide team." Okay. Here we go. That's the sales. I'm saying 143 billion. 143. Let me show you what I'm looking at. No. Well, that's not it either. Give me 1 second. Let's do this. So right here, this is what I'm pulling up, right? This is what I pulled up today out of what they filed with the SEC. I see here their assets, 40 billion in cash, 53 billion in a marketable current account. So total current assets, that's money that the company can use back and forth and whatnot. So some people consider that cash. Total current assets mean money that can be turned into liquid within a year or less, within 12 months. I'm saying that at 143 billion, right? Now, unless they added in their, let's see. So I'm saying 143 billion in total current assets. I'm going to get 192. That's as of March 28, 2020. The total assets of 320 billion. $192. I'm trying to see how they came up with that number. They added in something else that I'm not. So they're up by, they're adding something 49 billion. It's probably total debt. I'm not looking at that right now. Accounts payable. Other non-current assets, equipment. Yeah, that's what I'm seeing. That's what I'm seeing right here. This is coming out. This is what they got March 20th, 28th. They got cash. They got 40 billion marketable securities, accounts, inventories, vendor, other current assets, and total current assets. So that's kind of weird, right? Sorry about that. Throat is getting kind of dry. Right? So the 192 billion, I don't know where they're going with that one. Sorry about that. But anyway, that's going to conclude today's episode and today's show. Right? Thank y'all for tuning in today. I got to get running. My mouth is dry up now, too. I thank y'all for tuning in and everybody that participated in the show. But I got to get rolling. Someone said maybe it's Apple's money invested in cryptocurrency. That's going to be, because what I'm seeing, their total current assets of 140 something billion. So it's a 49 billion that's off somewhere else that I got to look on the balance sheet a little bit deeper and see if I'm missing something. But I see about 140 something billion that they reported. So it's 192 billion. I don't know if somebody reported that mistakenly, but I got to look a little bit deeper to see. All right. But anyway, I'm going to get out of here. It's getting late in the show. I appreciate everybody for tuning in and participating in the show. I appreciate all of y'all. Until the next video, podcast, cartoon, or whatever else you see me do around the globe. Peace. Be safe. I'm out.